MicroStrategy, the world's largest publicly traded Bitcoin holder, is shaking up the markets again, and this time it's with a $2 billion plan to offer perpetual preferred stock. So this move introduces Bitcoin exposure to a brand new cohort of the traditional fixed income market, one that is much broader than its current relatively niche convertible note offering. So today we're breaking down how it works, what it means for investors, and why this could redefine how Bitcoin fits into the broader financial system. Before I get started, check out Dylan LeClaire's original analysis for this linked in the quote tweet. So first, let's unpack perpetual preferred stock. You can think of it as a hybrid between debt and equity. First things first, it offers fixed dividends, making it similar to bonds, but it has no maturity date so that investors can hold it indefinitely. Preferred stockholders also rank above common shareholders in dividends and also in the event of liquidation, but below debt holders. So if you think of a company's capital stack, they are above common shareholders, but below the debt holders. And most importantly, there are no voting rights attached. So it doesn't dilute control for MicroStrategy's management, which is particularly good for this company given how much capital they're raising. So why is this important? Well, perpetual preferred stock can serve as a bridge between fixed income investors seeking stable returns and MicroStrategy's Bitcoin-driven strategy. So you might be thinking, hasn't MicroStrategy already done something like this with its convertible notes? Well, yes and no. So convertible notes are debt instruments with optionality to convert into common stock, and these notes do indirectly expose investors to Bitcoin because MicroStrategy's stock price is heavily tied to its Bitcoin holdings. But convertible notes primarily target arbitrage desks and other sophisticated debt investors, not the traditional fixed income allocators like pension funds, insurance companies, and the like. Preferred stock, on the other hand, is designed to attract these traditional income-seeking cohorts who are just looking for steady dividends, plus this unique upside through embedded features tied to MicroStrategy's Bitcoin exposure. Now, here's where it gets interesting. We know that MicroStrategy is essentially selling volatility to the market. MicroStrategy stock is incredibly volatile because it serves as a high beta proxy for Bitcoin. So by embedding conversion options into the preferred shares, like the ability to convert into common stock, MicroStrategy is packaging that volatility as a product. So to break this down, high volatility increases the value of that optionality. And with MicroStrategy's volatility at 87% and Bitcoin's long-term upside, these preferred shares become an indefinite Bitcoin-backed call option, which is immensely appealing to fixed income investors who would otherwise avoid Bitcoin's direct volatility, but now they get exposure to its upside potential. So to put this into context, globally, there are about $1.93 trillion worth of preferred stocks outstanding with an average issue size of 559 million. In the US, there are 306 perpetual preferred issues worth 115 billion with an average dividend yield of 6.28%. And these securities are widely held by the aforementioned institutions like pension funds, insurance companies, and mutual funds. So why is MicroStrategy doing this? Well, the benefits are very clear. For one, this is non-dilutive capital. So preferred shares do not dilute voting control, unlike common stock, which again is great for a company like MicroStrategy, who's constantly raising billions of dollars in plans to raise $42 billion over the next 3 years. It also has no principal repayment. So unlike debt, preferred shares don't require any repayment of the initial investment. The company only owes annual dividends, which could be as low as $120 million annually on this $2 billion raise if we take the 6% annual dividend yield, which is the average across those 306 perpetual preferred offerings in the United States. And most importantly, it's expanding the pool of capital that MicroStrategy is offering these structured financial investments to. It taps into a broader range of fixed income investors, and in doing so, widening the base of people that it can offer these products to. These are institutions with much deeper pockets and mandates to hold preferred stocks as Tier 1 and Tier 2 capital under Basel III regulations. And of course, this capital will get recycled into Bitcoin. But here's the bigger picture. This move integrates Bitcoin into the fixed income market in a way that we just haven't seen before. So convertible notes introduce Bitcoin to niche debt investors, whereas preferred stock takes it to a much broader, more conservative audience, offering that Bitcoin exposure through the lens of steady income. So for fixed income investors, this represents an opportunity to earn reliable dividends while also gaining asymmetric upside through Bitcoin's long-term price appreciation in this market that's traditionally very wary of volatility. In essence, Bitcoin is no longer just infiltrating the equity market, it is now penetrating the world of traditional fixed income in a very big way. So MicroStrategy's $2 billion preferred stock plan isn't just a capital raise, it's a massive innovation in structured finance that redefines how Bitcoin fits into global markets. And by bringing Bitcoin exposure to the fixed income market, Saylor and his team are opening the doors for new institutional adoption. That's all for today's video. Thank you so much for watching. Of course, check out Dylan's original analysis and follow him if you haven't already. Make sure to like and reshare this video if you found it valuable. And of course, check out the world's simplest self-custody solution, Theya, spelled T-H-E-Y-A, like you can see behind me. You can check it out at theya.us, now available on web and the App Store. That's all for today's video. Thank you so much for watching. I'll talk to you soon.